Best people, how are you? It's the Crypto Sniper. Just a quick check-in with you on the Sunday. It is Sunday the 21st. Indeed, indeed, indeed. So quick look at how Bitcoin's faring, and generally also look for crypto as a whole, which pretty much goes hand in hand, I would argue. And what we can only say is it's been a tough old goat for crypto. So we did speak a lot about beware the rising wedgies. Squeezy, squeezy, Japanesey. Yep, it did spill out of that. So key level, 25k. Reaching and exhausting. Couldn't do it there, couldn't do it there. Just stretched and ran the brass ring. A number of long pubic hairs. You're looking at the very small end here. You can see how it's done. Generally since those highs in and around there, 69. So it's a confirmed major sell-off environment. So let's drop in a bit closer, because I'm doing this analysis on the more recent events, rather small time frame. Let's drop in a bit lower. But just as a reminder, trend is your friend, and most things are suspected as continuation until otherwise construed. So if we have a look at this bottoming pattern, what are we seeing? Well, let's see. Let's let it load up and see. So here we are, there's the view I wanted. If we switch on the lights of our jaws, we've said for an extended period that there's a broadening structure here. That is of great concern. The last time we had a sell-off event that I called the orange box sell-off event was the last major spill in and around a bracing ascending grind line break, that red line. Well, you're back at that red line, friends. It's not good news. And you're bouncing off the 29,950, which we've also highlighted. This blue line's been in our charts every time we've done an update for an extended period as a point of interest, as interim resistance there, interim support there, support, and now here you find yourself again. And many people thought, well, that broadening structure of yours doesn't really matter much. Look at this, we are now in the upper half. You know, you'd had one, probably two in there, and one in there. You had four touches, key touches. Let's do them in the pink, actually, pretty in pink. You had four key touches along the base there. And you hadn't had one in a while since. And this is what I call very exhaustive price behavior. When you're really, really stretching and reaching to do the 25k, reaching for that brass ring. And you can see our splitter, how you were supporting there and there on the down legs, trying to hold the broadening structure, splitter, and then you broke it, little flag, revisit back up, and there's your spill. Pretty ugly, pretty brutal all the way down. And as I've said many times before, and by the way, it's quite amusing, we get a couple of guys that say, oh, I think I've figured out just from your YouTubes everything I need to know about HVF method. Sorry, friends, the best thing to do is to learn and implement in live markets, not look in retrospect and think you've got everything that you need. It's very unlikely, and in fact, most people that have told me that, I've seen multiple errors when they've come on board that they thought, and the implementation, and there's lots of topics that you haven't been covered in the nuance. But something I tell you for free is the continual litany of highs, making marginally higher highs, where traditional technical analysis says new high, bullish, we tell you is bearish, and there is that rising wedge that goes with that, and that was your splitter in that, all inside a broadening structure which has got a mild rally to the underlying trend sell-off from the last orange box. That is not bottoming. How many times have we said that? It's not bottoming. Look, generally it's not. Could we have been wrong? Possibly. Generally it isn't. And you've had a number of swings, up, down, and then this gave a lot of people real hope. You're wrong, perma bear, hanging in the upper half. This exhausts the hell out of the buying. And eventually you get your 25 run. That was the first wick that nicked it. There was a second, and you got rejected brutally. You broke that bagel there. You can see a nasty rejection candle. I was warning the community on that. The shorts could come good. You're sitting holding that splitter on the pink line, and you gave up with a flag, and there's your sell-off. This is good money. And I've told our guys what we're going to be watching for, and you won't like it. And we're going to be watching for price behavior in here. There's a lot of things that could happen. It could get reasonably strong and rally back there over that time and then come down. Could do a few things, but there's also one thing we'll be watching in specific, and that's going to be something we'll be keeping our eyes out for. And they're all on night watchman duty at the moment. And it extends across all the cryptos. It extends across all the cryptos. We have one particular crypto that is a big name crypto, well known. It's none of these ones that these pump and dumpers try to sell into you and say is going to go to the moon, and then they're dumping their stock into you like, the guys that did that, you know who they all were. It's a substantial market cap. It's in the top 10, 12, 14, 15. Whenever I last looked, I haven't looked at coin market cap a lot. It's price behavior for me. It's price behavior and it's macro time. Anyway, that particular crypto, it's our assessment, will lose probably over 2/3 of its value. That's pretty bearish. It's a pretty bearish time, guys, on the macro. You should be watching out. This euro is back very close to parity again. The dollar index is back up. Everyone thought it was peak dollar, peak inflation, peak everything. I'm afraid peak stupidity is probably the only thing that I'm betting on. We've told you about, and by the way, the crypto, I think that the crypto market across the board will be hurt, but we've told you a lot about Maker, and it's not the one, by the way, but that had a rising wedge. You saw a beautiful little smaller time frame, and this is macro to micro time frames. You can think you know all the theory. You don't know anything. First, you don't, and second of all, you don't know how to implement it. But macro to micro time frames with that tiny grind line and that squeeze and that huge rejection candle, that was all green, ended like that. That is an absolute bellwether of rejection. And in the exact same way Bitcoin strived for that 25K, this fella strived for his 1225. Ethereum punched through, as I say, a burger and a Coke through the $2,000 for 2030 before all key round levels were then done. This is not good price behavior. This is not. And on this particular one, you failed to make the new high. Squeezy. You could have, had you been wanting to trade this, and that's not a recommendation, you could have traded the break of that wedge on the break of that smaller doubled orange line that I've given you. And then you could have waited, if you wanted to wait for the bagel to break, you could have had it there, down. And that's not bad, in a meager pickings environment. 1,047, 1,050, 1,060 if you're in here, down to 840. It's not bad, and I think there could be a little bit more to come. There is real ill wind in crypto, and I've continued to highlight to you this very important point, that the NASDAQ, which is high beta stocks, which is deemed as a tech hive mind in much the way that the crypto market has tech hive mind and intellectual capital, is continuing to outperform. So you need the highest beta things to be doing well for it to be a bull market. When you're getting the lower beta ones outperforming the higher beta ones, there's some fear out there for what might be coming. We've spoken of Tezos. We mentioned Ethereum down to 1600s after hitting 2030, and that's one of the most exciting news-driven one. So yeah, that's a little bit on the crypto environment, and this is what we've told you on the macro, because the macro is a driver. You have to think and realize the macro. There's a friend that always asks for XMR analysis, and I'd love in principle for XMR to be entirely different, and it has held up better in some ways to what Bitcoin's just done. So I'll give him a quick shout out and undo the XMR, but it's also had a sell-off. This was also grindy. This was like, an LGBTQ fest there on the mobile app. They were grinding away like nothing. My concern with this kind of price behavior is that it's always going to roll over, square up and roll over, and then you get a bit of a spiller. But in terms of how far it's spilt, and it's got a little bit of a rally, it's just less bad. But I don't feel you should be in crypto at all. Stable coins are your friend. There's a period for making profits, and there's a period for not making losses. When the opposing team has the ball, a strong defense is good. You don't want to be thinking about attack without the ball. Excuse me. So, Monero not bad in terms of relative comparison to the others. like I've suggested with BNB. But it's not the game for you. It's not the game for you if it's not the crypto game. You will get other chances maybe in the future to get engaged with it, and that time might come. So let's take you just to those macro, many of the things you don't want to talk about, but that are worth noticing. Point number one, that if you're a crypto guy and you just want to have macro 101 to understand when's a good time and when's a bad time, this is not a good time. Rising rates on the bond markets are contracting. They're doing a little bit of tightening in the US, a teeny bit compared to how much printing they did. This head and shoulder doesn't look like it's likely to happen. If it runs that high, that right shoulder is invalidated, and that's around 3.1. And this has stormed back to 3 and just pulled a little bit back from 3. This is rapid. So the bonds are devaluing. This is an asset deflating time. Interest rates pushing up. In other words, negative real rates. And I think I should see if I can show you this chart. A couple of things here. Let me show you this fella. Negative real rates are when basically debt is the worst asset to hold. In other words, your money's losing value far more than what they're paying on it. And it's always been associated with very bad economic times. This is a particularly long one, 1789. I don't know too much about the history of economics in 1789, I can tell you. Negative interest rates, but I do know a bit about the 30s and how bonds were a terrible hold during that period. And of course, going into the 70s, into the 80s gold bull, real devaluation of bonds compared to the proliferation of fiat. In other words, holding a bonds portfolio. All these guys wear diamonds, buy bonds, wear diamonds. It's a terrible idea. Negative real interest rates is chronic overperformance of bond-based debt investments. You have taken out the gold and silver bull that followed around about this period here, that time, these huge negative rates. That's why the gold and silver bull will come, but you might go further into negative rates and the paper price of gold and silver will actually go down first. But boy, when it comes out, it's going to come out with a potential vengeance. So this is the game. This is the game of understanding the financial system and the economics. Negative real interest rate environments is contracting bond market. So you think, well, I'm into crypto. I don't care about the bond market. Actually, you should do, because when the interest rates go up, because the value is going down, because that's what happens, you have to pay more interest to people who don't want to hold it. What happens is loans go up, cost of lending, cost of mortgage, and everything else. This is very negative, and it also hurts tech stocks. But relatively, tech stocks are still outperforming on the Bidenomics rally, where he unleashed a whole bunch of America's petrol to reduce the inflation to flat for 1 month on account of aviation and fuels. Everything else, rents, food, still going up. But he netted that off because energy is in everything, and you can short-term manipulate the energy market, but you can't long-term do it. So you got your Dixie up, which is the dollar, and as we've already said, this breakout, we mentioned when this breakout occurred, we're on the long dollar trades. Everybody will go, yeah, I'm not a central banker. I don't agree with the dollar, the hegemony. I don't agree with any fiat hegemony. But I can tell you what's likely to occur, and this is a very strong move. We probably have some wind-up structure, and we're going to go higher. We have had a macro HVF for this, and we have been warning you ever since. This is not a good environment for Bitcoin. It's not a good environment for crypto. Save. Do not get beaten. Do not lie a battered pulp. There's quite a possibility that, Bitcoin could go 10K, 8K, and lower. At 21 now, if it spills through that bagel, there's no saying how far it might go. It can go to our 15 level, which is one of our levels. It can go to our 10 level, and it can break the 8s. And, all of those are terrible for your wealth. If you were holding and you had X amount of money at 25K and you think you would be selling near the low, getting out here, well, you might get a wee rally in quiet, light volumes. But it's what happens when it's back down here on this level that should be a problem. And as I mentioned, we had that key level of significance, 29.50, and that bagel, and it's come right the way back and kissed that. Okay, so that's crypto. Again, the message, there's a Led Zeppelin song called "The Song Remains the Same." As far as I'm concerned, the song remains the same. I'm not telling you too much new every time, but sometimes you believe me a little more after you've seen a bit of a sell-off back to key levels, and it's absolutely to be expected. This intersection here of our bagel and the key level just shows the power of the method. No one else has drawn. No one else has learning tools for broadening structures at all. It's one of the things in technical analysis that I don't see a single soul on it. Occasionally one person in a blue moon will draw it and he doesn't make much of it. It's just an expansion of volatility. So what? Is it continuation? Is it reversal? We have nailed all of this down. This is HVF method theory. You go to themarketsniper.com, you can book a call and have a chat, and you can start doing this for yourself. And more importantly, see how it is done by us who have been doing it for a long time, practically, so that you can do it before the events occur and you can be better positioned. It's an on-balance of probability game. Okay, so Bitcoin likely rallies short-term, short-term as in like the rest of today, maybe possibly on Monday, Tuesday. But more medium-term, you want to be very, very careful, and I'm expecting shorting opportunity setups. Again, apart from that which we already have on a alt that we assess will lose a substantial amount. We're talking about 66% of its current value. A big name with a person you all know. Okay, and the others are expecting similar moves. This one just gives us targets. We trade HVFs. We don't trade it just because we think it's going to go down. We want a stop placement, we want a target, and we want the ability to get in. Okay, that's it for your quick update on your weekend. Remember, hit us a like and a share. We do this for essentially for free. There's no charge in it, and helping us with the algorithm is a very small gesture. So hit that like button now and share it to your crypto Telegram group, friends, Facebook group, whatever the case may be, where the guys are watching that. We appreciate that and we thank you for that. And many of you do that very consistently and regularly. But be careful out there. Don't take a beating. And don't be fooled by a mini fight back that might take part early on in the week. This is a key level where structural support could and should and was likely to be there, but that will probably likely fail at a later point. Bye for now, and thank you for watching.